Hello traders, the title of the video is Mastering Elliott Wave Accurate Forecast during the fifth Elliott Wave. Alright, so it's quite challenging to forecast the end of the fifth wave or the end of the motive wave, because the motive wave is formed of the first, second, third, fourth, and the fifth wave, and we are now in the fifth wave. We want to focus not only the end of the fifth wave, but also the end of the motive wave. All right. So there are many ways that traders will forecast the end of the motive wave or the end of the fifth wave. All right. So what trader will do very often, because you have to understand that each wave forecast is very, very important. Let me shout about this. Each wave forecast is unique. Did you get that? Or should I shout louder? Each wave forecast is unique. Did you get that? So each wave forecast is unique. So you forecast the fifth wave of another financial instrument, and you are about to forecast the fifth wave of another financial instrument. Understand that each wave forecast is unique. Now, the uniqueness of your that wave forecast is relating to that financial instrument. The uniqueness of that wave forecast is also relating to the time frame that you are using, talking about the lower degree and the higher degree. All right. And each wave forecast is relating to the person or the area wave trader that is forecasting the financial market. This is very, very important, because now what the reason why I want to dwell on this a little bit more is that sometimes trader will go and purchase, okay, area wave services, and the area wave professional will forecast the market for those traders. Now, I hope my fellow Elliott traders that are focusing the market are doing a very good job by highlighting to those traders that each wave forecast is unique, talking about the time frame, okay, the trader, and the financial instrument. Because if you do not mention that to traders, trader can quickly get into trouble. All right. So each wave forecast is very, very unique. Now, talking about relating each wave forecast is unique, relating to the time frame that we are talking about. So, for instance, one thing you need to understand as we are talking about mastering area wave accurate forecast during the fifth wave, the best scenario will occur when we are in a fifth wave on a lower degree, and also in a fifth wave on a higher degree. So like you notice that I use very often on the monthly chart. So suppose we count wave on a monthly chart, we are now in the fifth wave. On the monthly chart, we are trying to forecast the fifth wave. Again, we switch to the yearly chart, which is the higher degree corresponding to the monthly chart, and we will try again, because each wave forecast is unique in relation to the time frame that we are using, yes or no. So we forecast it on a monthly chart. Now we are forecasting it also on a yearly chart. But if it happens to be that we are in a fifth wave on the lower degree, monthly chart, and also fifth wave on a higher degree, it becomes very, very interesting. In that case, you need to pay attention carefully, because on the lower degree, the corresponding lower degree, we are in the fifth wave, and also on the corresponding higher degree, we are in the fifth wave. But things will become a little bit different when, for instance, all right, your fifth wave on the lower degree is just the fifth mono wave of the third wave of a higher degree. You need to be very careful. So what is happening there on a monthly chart, you see your fifth wave, but that fifth wave is just the fifth mono wave of the third wave of a higher degree. So you are not in a fifth wave on a higher degree, you are in fact at the end of the third wave of a higher degree. But on a monthly chart or on a lower time frame, you are in a fifth wave. So it's so important when we are talking about, okay, area wave forecast. It's critical to understand that the area wave forecast is unique. Why? Relating to the person, the time frame, all right, and the financial instrument that we are trading. If we are using any area with services and we forget that, we can quickly do all kind of things or probably blame those who are providing those services. So to avoid all kind of blah 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 and sleep nicely, I avoid those services and I do give everything for free. I'm not saying that my fellow traders that are providing those services are doing a bad job. All I'm saying to you that they are facing a big challenge. All right, they are doing a difficult work. That's what I'm saying. It's not easy to provide those services in the financial market. All right, you put your reputation on the line, and people will come down on you from all kind of corners, and you need to tell them exactly that each wave forecast is unique. The second thing that we need to understand, talking about mastering area wave accurate forecast during the fifth area wave, is that traders use different methods to forecast the market, especially when we are talking about the fifth wave of forecast. Many methods. So when you are forecasting the area, especially the fifth wave, which is very important for us, we want to forecast the fifth wave. We need to forecast the fifth wave using different strategy. So the first strategy, because the reason you want to compare, so you forecast it using one method. The one method is to compare, to connect the high of the first wave and the high of the third wave. Sometimes that will be useful, sometimes it may not be useful. For this talk, as you can see, first wave, second wave, third wave. Now, there was a cancellation which I talked about before. If you want to know more, watch the video that I titled Mastering Complex Area Wave Structure Analysis like the expert at the 24 Elliott Waves YouTube channel. If you want to understand how I count my wave here. So there was a distortion here, and now we have the fourth wave here. Here first we have the fourth wave overlapping the first wave, then we have a new fourth wave. It is a mistake to watch part of our video. Okay, so the first method to forecast the fifth wave is to connect the high of the first wave and the high of the third wave. Here you can see it's quite useful because it's well above it. So we are now in the fifth wave. Every time we are in the fifth wave, we can expect an extension. If the fifth wave is extended, it can go up. If you extend this trend line, I don't have room to draw it, to extend it. If it's going up, and you want to, where are we going? Where is it going to end? When that fifth wave is going to end? Which day is going to end? The market is overbought. It's going to crash. When is it going to start? Look for that, okay, trend line somewhere up there. If you are trading this stock, AGCO Corporated, all right? AGCO Corporated, EPIC AGCO, belonging to the industrial sector. So correcting the high. So that's one method. So because I'm on a monthly chart that forecast, saying that the fifth wave, if it's extended, continue to go up more. Yeah, there is a target up there. It's the edge of that trend line, specifically for that monthly chart. So this is the lower degree area wave forecast on a monthly chart using one specific method. So the uniqueness of this forecast is because I'm using only the high of the first wave and the high of the third wave, and also I'm on a monthly chart and I'm trading AGCO Corporated. Another method that trader will use at this junction, if that method is useful, sometimes you apply one method, you think that in fact it's not useful. We'll talk about it in another video. They connect the low, they use the pitchfork tool, connecting the low, the high of the first wave, the low, the high of the first wave, and the low of the second wave. With those 3 points, traders will put a pitchfork tool. Now, sometimes this method may not be useful. Here, it will be useful because the fifth wave did not touch, okay, some section of our pitchfork tool. If it's above it, then that pitchfork tool becomes useless, yes or no? And now here it is still below it. So you can see carefully, my friend, by placing our pitchfork tool using a second method to forecast the end of the fifth wave, some traders at this junction are calling this the end of the fifth wave. That's what we are talking about. So other traders thinking at this junction, which is okay. It is okay. They say, it looks to me this is the end of the fifth wave. personally, I would prefer that fifth wave to go above this high here. Otherwise, I will come back again and review our wave count. Or is it an Elliott wave failure? What is an Elliott wave failure? The Elliott wave failure will occur when the fifth wave fails to go above the high of the third wave. So if it's stuck here, that will constitute an Elliott wave failure. Okay. So this is one method. So now on the edge, if we continue to extend, the second level that we must watch is the medial line of the pitchfork tool. If it goes above that medial line of the pitchfork tool, it will come back almost to the first method, which means connecting the high of the first and the third wave is almost equal to the upper level of our pitchfork tool. Can you see that? The blue line and the upper level of the pitchfork tool is the brown line, and connecting the high of the first wave and the third wave is almost here. So if we start going down, we'll watch the medial line of the pitchfork tool. If it goes above the medial line, we watch the upper level of the pitchfork tool. That's another method forecasting the fifth wave. All right, so if you're forecasting any financial market, especially in the fifth wave, all right, those are the things you need to pay attention to. It's unique relating to the time frame, unique relating to the financial market, unique relating to the method that you are using, unique relating to the financial, the Elliott wave, a trader that is forecasting the market. So the tool that we are using, the time frame that we are using, the financial market that we are trading, and the person that is forecasting making the forecast will influence the forecast itself. Is it getting too much for you? Take it one bit at a time. Don't be choked. One bit at a time. So sometimes you may watch a video, you say, "Oh, George, that's too much for me." All right, put it aside. Okay, put it aside. Come back another day. Or you say you're training again. You say, "All right, yeah, this video was saying this," and then you come back again and watch it again, and maybe it make more sense, and then you continue, and then you watch the full length of it, and then you learn something from it. Okay. So this is the second method on the monthly chart again. Now, if we switch to the yearly chart, we want to, and we will focus again. Okay. The fifth wave, if we are in the fifth wave. So let's go to the yearly chart. You see the uniqueness of the Elliott wave forecast. So on the yearly chart, we see first wave of a higher degree, second wave of a higher degree, no Elliott wave violation, third wave of a higher degree, fourth wave has overlapped the first wave. We expect a new fourth wave. I talk about it in that video. Mastering the complex Elliott wave structure analysis like the expert. Fourth wave right here, not here. Okay, and we are now in the fifth wave. So again, so this is a very interesting scenario because we are on the fifth wave on the monthly chart and also a fifth wave on the yearly chart. So the fifth wave on the corresponding lower time frame and also fifth wave on a higher degree. It becomes very, very interesting for us, and we need to take the correct steps when we are focusing the fifth wave. When the fifth wave, the financial instrument is in a fifth wave on a higher degree and also a fifth wave on a lower degree and higher degree, all in the fifth wave. We need to take the correct step and be aware of the uniqueness of the Elliott wave forecast. If you ignore the uniqueness of each wave forecast, that will get you into trouble, and you may not achieve an accurate Elliott wave forecast. You want it to be accurate, yes or no? Accurate Elliott wave forecast. We are not talking about normal Elliott wave forecast, ordinary wave forecast. We want it to be accurate, precise. So, talking about precise, it means that you are looking at it from different angles. So you may not have one level alone and say the fifth wave will end here. No, that's not the best forecast. High probability, because in the financial market it's all about probability, high probability that it will end at a $71.62, which is happening here on the edge of the pitchfork tool. Second probability, near the median line. Third probability, near the upper level of the pitchfork tool, which is corresponding to connecting the high of the first wave and the high of the third wave. So this is how you're going to forecast the market. You will not use one level, and you will explain it to your client why you are using those methods and explain to them the uniqueness of your Elliott wave forecast. So this is the second method that we were using on the monthly chart, And the good news is that we are the fifth wave on the higher degree and also a fifth wave on the lower degree, in this case monthly and yearly chart. So if you are for instance focusing the area wave on the hourly time frame, you want to check also you are focusing the fifth wave on the hourly time frame, you want to check the daily chart because the corresponding higher degree time frame for the hourly time frame is the daily chart. All right, and so on and so on and so on. Is it making sense? So this is the second method using the pitchfork tool, so we can focus the end of that fifth wave for that potential instrument on that time frame. And this is my area wave forecast, talking about myself, George. You will notice that that wave forecast is all, okay, has my fingerprint on it, all right? Okay. So now because we see here, so there's another method with the fourth wave is a triangle. You can see here it's a triangle. The normal, so we're talking about viewpoint of area wave traders, viewpoint of normal technical traders, our own viewpoint using different time frame, all right, and so on. So here we are. So because the fourth wave has cancelled the first wave, we have a new fourth wave here, which is a triangle. We can use the width of that triangle to focus our fifth wave. So you see, we are using different methods to focus the fifth wave. Never use one method alone to perform your area wave forecast, unless there is only one method to focus it. All right, so there are many ways to focus the end of the third wave, end of the fifth wave using Fibonacci and so on. All right, even using the pitchfork tool as I did now, that will also help us sometime to focus the end of the third wave. All right, but what I'm trying to recommend to traders that are following us is that it's better to use various methods when it comes to area wave forecast. So you are comparing, okay, with this method, that's what we have, and you highlight all those key levels so you do not get fixated on one key level and say definitely it will end at $71. This is what I'm saying to you. That's exactly what's going to happen. And that kind of attitude, a bad attitude in fact, in the financial market, when the ego, people say, I know it all, I've been using area wave for years, who are you to tell me? And so on and so on. And then the opposite is taking place, and people lose money, real money, lot of money, and you don't want that. Okay? So now that we have a triangle here, it makes sense, yes or no, to use the width of that triangle to project in the direction of the price, to set also a target to focus our fifth wave. And that triangle is also valid on a higher degree time frame because there are similarity between the higher degree and a lower degree in this case, which is good. Simplify our task. So other greedy area wave trader, which you shouldn't be greedy, we put it all the way to the top here, but the price did not come here at all. Why do you need to put it all the way to the top here? Though the triangle is quite wide like this, the price never come here. Why do you have to use all this width? But in theory, some trader will do that. So they will project it like this. Personally, I would prefer to use a more conservative approach. So their target is somewhere up there. It's probably near this line here. Okay, when you extend it, if you can extend it, somewhere up there. If you go to the yearly chart, you won't see it. Okay, it's not finished. Somewhere up there. Are you with me? Are you getting used to my beautiful accent? All right, my American accent. Okay, good. Now this to make you laugh a bit. Okay, another group of traders will use this measuring stick. So this is the first one. It's quite narrow, this one, something like that. So I'll prefer to use that. So from here to here, the price did go there, stop there. We'll use that. So again, you can see that though I'm using a triangle, again, I'm going to the mind of other traders because not all traders will set their profit target like this is what I want you to understand. So you say, all right, so you may say, for instance, that this is the correct way. Get rid of that. There's nothing like correct way in the financial market because traders are doing all kind of things, and you can go to their trading room and tell them this is the correct way. That's the way you should do it. The guy is going to buy, he's going to buy, he's going to sell, he's going to sell. He's going to play his stop loss there. He's going to play his stop loss there. That's his decision, and that's what you're going to do about it. So there is a correct way in theory, and there is a correct way practically trading. So another group may place it there. It's quite reasonable. That target at $81 level. So if the extension continue, we expect our fifth wave to end somewhere there in the zone of $81 level. Are you happy now? There's another thing I would like to show you is that again with the same triangle, I may go, you see, this is the lowest point of the triangle. I may push it all the way to the high. So this is the lowest point of the price when we are dealing with the triangle, and this is the highest point considering only the price instead of the triangle. Some trader may do something like this, use this measuring stick instead of the other one. So if you put it here, somewhere here, we switch, that's the third one. Are you getting it now? So we want to cover ourselves. That's the red one there. And we go to the yearly chart. Can we see? We can't see the end of it. I know it's not the end of it yet. It's somewhere up there above the $81 level. Call it a 90 level. So from the 70 to 90 level, if it continue to go up, we need to monitor the reaction of the price in that session. So this is about mastering Elliott wave accurate forecast during the fifth Elliott wave. As I've been shouting out before, each Elliott wave forecast is unique in relation to the person that is making the forecast, in relating to the financial instrument that we are trading, and also relating to the time frame that we are using, higher degree, lower degree, and also the method that we are using. The best approach is to see from different viewpoints. When one is using one strategy to forecast the financial market during the fifth wave, one should also compare it to other methods to see the different levels of the forecast, different forecasts. You will not have one forecast, you will have multiple forecasts for the fifth wave. It will be better for us if the fifth wave is the financial instrument is in the fifth wave on the lower degree, and at the same time in the fifth wave in a higher degree. If that is not the case, it makes the task a bit difficult. Just understand that the Elliott wave forecast is relating to the time frame that you are calling it out. But one should also, if you go to the higher degree, you want to see the forecast on that time frame using again the different methods. So normally, if the yearly chart was not in the fifth wave, we will have applied, okay, suppose the fifth wave, the higher degree is in the third wave, we will have applied the method of forecasting the third wave, yes or no? So you have the monthly chart is in the fifth wave, but the yearly chart is in the third wave. So on the monthly chart, you'll be using strategies to forecast the fifth wave, yes or no? But on the higher degree, you'll be using strategies to forecast the end of the third wave, yes or no? So this is what's going to happen. So this is why we are saying that the Elliott wave forecast is unique, relating to the financial instrument that we are trading, the time frame that we are using, lower degree and higher degree, and most importantly, the wave that we are in. Are we in a third wave on a lower degree? Are we in a fifth wave on a higher degree? Are we both in a fifth wave on both a lower and higher degree time frame? So that will help you to perform an accurate Elliott wave forecast. Most importantly, I'm saying this, most importantly, during the fifth wave, when we have the financial instrument in the fifth wave on a lower degree and also in the fifth wave on the higher degree, it becomes very, very important for us to perform an accurate Elliott wave forecast, because a multi-wave is about to end on the lower degree and also a multi-wave is about to end on the higher degree. This may become a little bit more complex when we start talking about the market in the fifth wave and the financial instrument also in the fifth wave. Or this may become a bit more complex when we start talking about the sector is in the fifth wave And okay, the financial instrument also is in the fifth wave. Or if we start talking about the component is in the fifth wave and the index also is in the fifth wave. For instance, we are talking about the Dow Jones in the fifth wave, and one of the components of the Dow Jones also is in the fifth wave, and so on and so on. Or a component of Nasdaq 100 is in the third wave, but the Nasdaq 100 itself is in the fifth wave. How do you forecast the market more accurately, more precisely, without cutting corners? This is what we are talking about here. If you have any question or suggestion, all right, feel free to put in the comment section, and of course I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us a thumbs up. If you think that this is another disgusting, funny accent, blah blah blah, for more than 25 minutes, mark it down, and that will put us under pressure to improve our next recording. If you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about mastering area wave accurate forecast during the fifth area wave.